All right, so we have an exceptional week. We had trading today. It's a Saturday, 20th of Jan. Disaster recovery site, server, and all that related news and event led to a Saturday trade today, and we have an end of a week. So we would take a look at how the charts look like and what's in store for next week. First, we'll take a look at the Nifty. If you see TradingView charts will show this fact. I think this is particularly because of how they calculate the data on their charts. So Saturday, they are not able to take it, and that's why they are saying for daily use 24H interval, something like this. Sorry, like this. But that's okay. I think we can manage with the WD, and I have the 75-minute time frame. Nifty first. So we have a sell-off. We have some bit of a sell-off, which is the most meaningful sell-off, I think, in the recent past. All this while, the momentum divergence and all that drama, and it kept on going up. It has given us some kind of a sign of slowdown weakness. One thing that I've been talking about quite repeatedly, and I'll quickly mention that here, is in this particular sell-off correction that we have had so far, it is mildly different than what we had seen in the recent past. In the recent past, every time the index had decided to come off, cool off, slow down, it managed a beautiful bounce back or support from its erstwhile highs. This is a very good fundamental technical analysis rule. When erstwhile previous highs become current lows, that's a nice uptrend, and vice versa. But if you now take a look at the current weakness, the current fall, it has not shown any intention to manage support at the previous highs. It has broken through it very nicely, and the next 2 days, that was today and day before, was more of a consolidation. Momentum readings at my end is clearly on the downside. Weekly charts are fine. Weekly charts have created an outside bar. Weekly momentum is fine. Maybe a little bit of a divergence on the very, very ultra short term RSI range expanded on the 2 standard deviation. So I don't think so. It's going to be a bullish market from here on. Most likely, or should I say, the best case situation would be if it creates some kind of a range, which we generally do notice when the market creates a range beyond the 2 standard deviation. But if a move comes beyond today's range, I think we are headed more towards a retest of 21,300, and I think 2100 should not be an issue in that case. So not very bullish. The short-term trend based on our indicators have also turned down, so I would say cautiously bearish. The cautiousness is primarily because of the long-term charts being exceptionally strong. There is sign of bearishness. There is no second thoughts about it. The confirmation of bearishness comes below today's low. On the Nifty spot, the low is that of 21,540. You can use 21,500. And that's why we are using the word cautiously bearish. If we come to the broader markets and take a look at CNX 500 next, then we would see a similar kind of a behavior. And I still have this ending diagonal drawn on my daily time frame. This was the phase. Yeah, so this was the phase wherein I was looking at it very closely, because ending diagonals after a rising market are a brilliant source of short-term, quick, sharp reversal. It actually didn't happen this time. So this guy can actually go away. And so we have a sell-off, we have a quick drop on the downside followed by 2 bounce back. But the broader markets, I think, have performed much better than what we see on the Nifty. Mid and small caps will be interesting. The mid and small caps both today have shown beautiful show of strength, and they have gone to a fresh life high. We did see that in today's trade, the railways related counters doing exceptionally good on the upside. So mid caps have hit a new high. That's a show of strength, and what a show of strength. Definitely we would say after a fall like this, bouncing back all the way back to a life high. It's not easy considering the momentum has been down all throughout. So broader markets are performing better. Nifty is relatively weaker. Now the most importantly, Bank Nifty and the financials. So Bank Nifty clearly a pocket of weakness. In fact, we've been talking about this, that see the Bank Nifty is in a downtrend and this is a pocket of, this is a window of opportunity for the index to come down. It did come down, but before that it did a bit of a 2-day bounce back to probably shrug off the weak shorts at 48,000 and then come down. Bottom line, if you take a look at the weekly charts of Bank Nifty, it has broken below this erstwhile highs, and it's knocking close to what can be termed as a typical technical support. Daily trend momentum down, short-term bounce back doesn't mean much. It's more of a runaway setup for us on the downside, and this is a pocket of weakness and this might stay. Well, majority of this is, and of course should be attributed to the fact that HDFC Bank is the one which carried most of this weakness. And so there might be opportunities like we saw today in Kotak Bank, or maybe you should keep an eye on ICICI Bank as well, which can probably give us short-term bounce back. But predominantly the view in Bank Nifty is coming to be bearish. CNX Finance, of course, this one, that was the ratio chart. This one clearly CNX Finance is mimicking the way the Bank Nifty had come down. Short-term congestion for the last 2 days, not much of a bounce back, typical runaway short setup, knocking at previous highs. So we'll see how this play out. But if you get any kind of a well-defined short setup on the banks, then one can go with it. But I think the banking will stay mixed, predominantly because of HDFC Bank. We had that move. Auto is showing strength. Auto was down in today's trade marginally, but it is definitely showing strength in the fact that, see, the weekly charts are fine. The readings are okay. They're holding well. Now, we had a move on the downside that did create a weak Heiken-Ashi. Trend momentarily shifted down, but the pullback is quite deeper. You remember when we took a look at the Bank Nifty chart, this was a nice, quick, shallow pullback beyond which we look for further weakness. Now over here, since that 2 days, it had extended its pullback, and probably that's what we are looking at in the auto pack. It's extending its pullback much more, whereas the momentum is staying down. Neither bullish nor bearish, but I think an important point to notice would be how it deals with the last 2 days lows. If they open up on the downside, then yes, or else just stay away from the auto till the point it gives us a proper, well-defined, let's say, setup. If you let me draw some kind of a parallel channel, which I love to do with the help of relative strength index, RSI, that is, sorry, not regression, but parallel channel, then I will draw something like this. And I would be waiting for, especially on the downside, I will be waiting for the CNX Auto to break below this channel, close below the channel. And that can give me some more clarity on the downside. On the upside, it's likely to stay range bound to volatile. Consumer durables, exceptionally strong weekly chart. And I don't think that one should be looking to short this pack at all. There's no sign of weakness on the weekly time frame. Daily is a customary slowdown with the overall markets. Short-term RSI indicators at our end are hitting oversold zones, and any intraday traders can look for some opportunities if and only if you get signs of reversal. Tuesday morning, Monday is the market is shut. So consumer durables, stay away. Auto, be careful. Bank Nifty can lead to further weakness. But there can be those odd Kotak banks and ICICI Bank that can surprise you. Now, energy was in this channel and it had given a bit of exaggeration. I think if I pull it out and what I can do is something like this. something like this. So holding on to this channel, and again, just like what we saw in auto, the bounce back is fairly deep. We see how well it has bounced back. Momentum is still down. Phenomenal weekly chart. How well is it holding right at the top over here? It's like a dizzy heights. So cautiously bullish, I would say, because of the trend being positive on both the daily and weekly. The cautiousness is because of the drop of momentum. Need to be a little careful. If it had broken below yesterday's low today, it would have been great. When I say great, I don't mean that I really like the market to fall, but what I mean great is it would have stuck to the setup of weakness coming from Heiken, a pullback and then opening up. It fits in the script really well. As of now, cautiously bullish, and let's wait for any kind of a move, especially on the downside, beyond this particular rising channel. FMCG had its recent choppiness. The trend and momentum, however, is clearly down. Weekly charts are slowing down. It's got good trend and momentum, and it's come off below sub 50 on the RSI. So I'm not too keen on shorting or looking for any kind of shorts within the FMCG pack. If you ask me, I'll be looking for some kind of show of strength. If it turns around, I'll be looking keenly for any kind of a buying opportunity. Remember, we've been looking at ITC of late, so let's keep an eye on those kind of stocks. IT, phenomenal couple of weeks it had recently. Big move, but the last 4 to 5 sessions, it has completely gone range bound. It's losing momentum. It's trading more in terms of time, not in terms of price. Stay bullish, and one can look for some kind of a breakout for fresh momentum on the upside. There is no evidence rational to go bearish, and so one should not look for contrarian short. Stay bullish here and look for that fresh momentum on the upside. Metals. Now this is going to be interesting. This is going to be interesting because the metals daily chart is clearly in a short-term downtrend with momentum being down for quite some time and couple of days of Heiken-Ashi pullback. Our range indicators are fairly in place. So it's calling for a kind of extension on the downside once these lows are broken. Is it supported by the weekly? I would say kind of. It is stretched. It's got some minor 2-bar RSI divergence. It's got a pretty decent range expansion this week, which can be a problem. But keep an eye on metal stocks beyond today's low next week. If that happens, I think metals can lead to the move on the downside. Then we have pharma and real estate. So pharma is again range bound and choppy right at the top. We don't have anything to complain about from the weekly charts, trend wise, momentum wise, holding pretty well, no divergences. So there's no reason to question the underlying trend weight. It's actually created a range for itself with a bit of exaggeration on the top as well as the bottom. This kind of a market makes the life of a trader difficult because there's movement and swings on both the sides on a very short span of time. We would like to avoid this. Unless we have a very, very good looking setup, there's no need to look into pharma. I would say keep an eye on FMCG for a possible revival, and definitely keep an eye on metals for a possible follow-through move on the downside. Finishing it off with the real estate, one of the crazy moves that we have had amongst the sectoral indices. No complaints from the weekly, very strong. Coming to the daily, it's trying not to fall, it's trying to consolidate after the recent 3-day short-term correction. Momentum is down. It's given you a pullback, but the trend is still very, very strong. So pharma, reality, there's no point right now to go for any kind of a contrast short. In fact, by the way we read it, there is no contra evidence. So reality and pharma will pass. We'll keep an eye on metal for any kind of a slowdown beyond today's low. IT for any kind of a fresh breakout beyond today's high. FMCG not ready but might give you a bottoming out behavior and can give you a move. Energy, the prospect, the fact that it had run up so well, we have to wait and watch. Energy, consumer durables do nothing. Auto will be interesting beyond that channel that we drew right now. And of course, keep an eye on the banks and the financials. Right? So that's the Nifty and the rest of the sectoral. Now let's quickly take a look at the questions and the stocks that we can look to trade next week.